Let's get more on this now with Ahmed Assiri in Melbourne. He's research strategist at Pepperstone. Welcome back to the programme, Ahmed. Now, we have major geopolitical turmoil, yet stocks are hitting records. Is the market simply ignoring the risks here, or are defence stocks masking those cracks?
Thank you for having me. I think equity market is set for another strong year in 2026, despite the geopolitical risk. Equity investors are assessing the applicable risk to equities, which is most likely to come from economic growth, corporate earning resilience, and also the labor market, which would have consequences on the Fed outcomes during this year, which is expected to continue to ease. However, when we look into the broader environment, geopolitical risk kind of encourage this diversifications from equity multiples, which is now standing at 23 times for the S&P 500, which is certainly safe to say those are optimistic valuations for the year ahead. And as a result of that, we see this diversification going away to the metals, especially gold and silver, and for the whole complex of commodities.
Right, and on that note, we are seeing copper, silver and gold rallying simultaneously. Do you see this as a fair trade, or are investors front-running Trump's potential metal tariffs?
I think it's more for the diversification benefits away from the higher valuation on equities. I think the diversification has become more important than ever, especially for South America and Latin buyers, as those geopolitical tensions affect them more than others. And as a result of that, we see those kind of fears going to gold primarily as a store of value. However, we know the file of rare earth metals is still centered in the geopolitical tensions, and I don't see tariffs as a very valuable tool for the US to use it, as the US heavily depends on importing those rare earth metals to the US to keep up with the advancement of data centers and AI. And I think it's not the wisest idea to enforce tariffs on it when it's rarely available to purchase as a discount as it used to be years ago.
Right, and we saw Chevron jump 5% as the only US player in Venezuela. Is the market pricing in a scenario where Washington fully controls those oil reserves in Venezuela?
Indeed, Chevron has gained nearly 10% over the past two trading sessions. And I think the market, yes, absolutely, they are pricing an optimistic scenario for US companies. Chevron has this strong reaction as it's the only US oil company that is operating in Venezuela at the moment, although it's at a very limited capacity. However, when we look to Venezuela export over the past few years, it has actually deteriorated sharply. And even the optimistic scenario, even when giving license and expansions for investment infrastructure in Venezuela, it will still take years. So absolutely, the market is optimistic on this front. However, I think there is still a lot of fog and uncertainty about it. So more news about the geopolitical risk to come in, and that either consolidate what's happening now in optimistic scenario in the market, or the market will reassess, and we will see that on oil companies' valuations.
We're also seeing cryptocurrencies come back, sort of, with Bitcoin near that $95,000 mark. Do you see this as a genuine comeback, or just a spillover from the Wall Street euphoria at the moment?
It's hard to tell with great certainty, as the crypto market highly volatile. The positive sentiment in equity market definitely contagious for this market. I think it's worth watching at the moment, but we will wait for further consolidations into those range, especially for Bitcoin. If it goes up, that will perhaps attract more momentum into it, revisiting all times high, but that will be to be seen in the market and to be consolidated. I remain neutral in Bitcoin at the moment.
Ahmed Assiri in Melbourne, thank you very much for your analysis.
Thank you.